What's up everyone, it's Karthik with MoneyVest and welcome on board for our Market Open live stream. Hope you all are doing great on this fine Monday morning. On the last week of February has been the perfect month with every single day happening 4 times. So this is the last Monday of February and we're going to be wrapping up the entire month to see how the markets close. Pre-market, obviously it's not looking great as there is a pretty substantial sell-off in crypto, which is now getting bought up right now, but trading back up to over $66,000. We got Ethereum also trading under $2,000 with some buyers stepping in. We got BMNR down almost 2%. BITX is down over 4% as the crypto-related sell-off continues. Crude oil prices are on the rise, trading up to over $66, $67 a barrel right now, up over 72 basis points with volatility also higher, up over 6%, trading back up to over 20 right now as markets are indeed pulling back pre-market. So hope you all are doing great and are having a great start to the week. Thank you so much for joining. If the audio and the video is good, just give me a thumbs up. Just want to make sure there are no technical issues and we should be all good to go. Hope everyone is in the Northeast US are doing okay. Good morning, everybody. Good morning. Good morning. Smash the like button, you silly people. Thank you so much for reminding everybody. So coming back over to this market, this week we also do have Nvidia earnings. So Nvidia is going to be a big earnings for this week. It's essentially going to be dictating market direction. It's been consolidating sideways itself for quite a few months now, since August of last year. Nvidia hasn't really gone anywhere. So if you come over to the weekly time frame, it does feel like it's been forming some kind of a bull flag. It did trade up to new all-time highs back in October of last year at $212, $213 a share, and then pulling right back down to consolidate sideways again with a resistance all the way up to 190 bucks, with a support level that's going to stay roughly at 170. So that's really been the range within which Nvidia has been trading. And as soon as Nvidia earnings come out, the next couple days, the entire shopping list is going to get updated. I'm so itching and so excited to release the new version of the shopping list because it's going to include the new buy targets and new fair values for so many companies. And they're going to get updated because of all the earnings that we've seen. And again, all the forecasting and the guidance, everything is going to be accounted for. Been spending quite a bit of time in updating my spreadsheet and will be updated on the website once Nvidia earnings are released. So that I think is going to be a big update, especially when markets are down so much. Individual stocks are down, not the markets, but a lot of stocks in tech and growth and AI stocks are down so much. I think it's going to be very important for us to look at that and use that as an anchor point to then make better decisions and look at where we can dollar cost average further. SoFi, Robinhood, and Microsoft are making me angry. So yes, those stocks have continued to sell off. You got Robinhood here down over 1.7% pre-market, stabilizing around the low 70s, which I think is a very strong support for Robinhood. Resistance all the way up to $93, $94 for the stock as well. And of course, it's very oversold right now. So on the daily time frame, continues to get oversold here, and there is some institutional buying also coming in with the L3 banker oscillator suggesting for some big money to be stepping in. Microsoft as well continues to struggle. It's down another 40 basis points, trading under $400 per share. Support level is going to step at $353 moving forward for Microsoft, with a resistance that stays put at roughly $400 per share at the moment. So that's the new resistance to watch for Microsoft. SoFi as well. Yep, SoFi continues to struggle at the moment. It's down under 1.4%, trading down to 1874, 1875. And you know what I was really reading the other day? It was quite interesting, and that makes me even more bullish on SoFi long term. So I read somewhere that the Gen Zs, right? Of course the millennials, and then after Gen Zs are, I forgot what the exact number was, but I do remember this one specific number, that this is the way that banking is moving forward. There was a lot of different trends that were understood and sort of addressed from Gen Z as being the next generation and how they're doing in terms of banking, how they're spending, how they're interacting with subscriptions, all of that. And one of the biggest takeaways was that a Gen Z only visits the bank once per month. It was 0.9 per month is how many times a Gen Z visits a bank, like a traditional branch of a bank. Compared to baby boomers, which was like 4 times a month, which is like once a week. And then millennials was twice a month, right? So once every 2 weeks. And so that number continues to come down. And as a result, it's one of the biggest expenses for any banks, right? To actually have brick and mortar branches for people to go in and do, their business, deposit checks, cash, whatever. But SoFi being a fintech bank definitely does have a very strong future cycle of Gen Zs opting to more tech, more digital friendly banking experience, as opposed to dealing with a clerk at a branch going to a physical location. I think that is going to continue to die off. And to be honest, like if I wasn't in Dubai, because Dubai still follows very traditional mechanics of writing checks and depositing checks and going to a branch, if I were anywhere else, let's say I was in the US, I don't even think that I would have visited a branch even once a month. It would be like once every 3 months or something to do anything that I really want to do. Everything would have been online and done over the phone or done over an app, right? Now you can even deposit checks. You can do everything except for cash, because even now moving forward, everything is becoming cashless. So moving forward, I mean, SoFi continues to have that huge tailwind, of the growing population of Gen Zs and the way they interact with banking and money and, everything else. But that stat alone was very interesting. That made me even more bullish, for SoFi long term. So I haven't stepped into a bank in years. Come on, Dave. I mean, what about all those rental checks that you collect? I'm sure you go into the bank branch at least once a week to deposit all your, piles of cash and checks that you've been collecting. But yeah, you can do that all online as well. The last time I stepped into a bank branch, even the tellers didn't want to be there. I'm Gen X. Yeah, I mean, so that is, again, continues to kind of go away. And I think more and more is going to just become online and digitized. And as a result, that does position SoFi really well, and even Robinhood for the long term. And, fintech is very broad. I saw one of the comments that all fintech stocks aren't doing well. I mean, fintech seems to be very broad, right? There's so many different kinds of fintechs that you can kind of categorize, but SoFi, Robinhood are the ones that are kind of leading the fintech trend forward. And those are the ones that I remain very confident in terms of profitability, in terms of, having very strong growth, earnings, having more customers, more people sign up. So all of that, I think for SoFi and Robinhood remains at the top of my shopping list for long term. Now, I mean, you could argue PayPal is also fintech, payment processing network, but that hasn't done well. Square, also Block, which is fintech, right? So that's another company, XYZ, that hasn't done well. It's just been consolidating sideways since years. Since 2022, it's been 4 years. Square hasn't done much. It also is fintech. But it really depends what kind of fintech are you really looking at. So wouldn't this stat be bullish for fintech? Mr. Beast is getting into with the number of followers he has, and in turn, good for BMNR. Yes, for fintech, I think, yeah, absolutely, it is bullish. Mr. Beast, I think, also picked up a fintech app, if I'm not mistaken. I think he bought one. But BMNR, I mean, is more of a treasury reserve for Ethereum, right? It's completely different. But then, yes, if Mr. Beast grows, then Ethereum having a moonshot investment in Mr. Beast also benefits. But that really isn't like part of the thesis, right? That cannot be part of the thesis. What is part of the thesis is quantifiable data that we can look at. But then the Mr. Beast scenario, the thesis around that becomes a bit of a long shot. If it works out, great, but I wouldn't underwrite anything based on that. So move my QQQ and S&P into equal weighted S&P 500 today, Mark says. Equal weighted has been doing well. So RSP, if you come over to this, equal weighted S&P 500 is still trading at near all-time highs. Year to date, much better performance, up over 6%. So that in itself gives you a very strong indication of how this market's been operating. This is a very value-oriented market so far in 2026. Growth, tech, AI software, everything has kind of lagged behind. The sectors that have done well: energy, industrial materials, staple, defensive, gold, silver. So this is, again, a very uncertain market environment, which is why capital is flocking more towards safety as opposed to growth. And that's why the equal weighted S&P 500 has done much better than the market cap weighted, because market cap weighted is heavily dominant with the tech, and tech has underperformed. And as a result, the entire index has been struggling, as opposed to equal weighted S&P 500 doing much better. So am I bullish on NU as well? NU Holdings. So I have done some research on this. I have, I think, shared technical analysis, obviously gone over the live streams as well. Overall, I think NU Holdings has strong potential. Valuation wise, we're looking at 33 times earnings, over 6.6 times sales. Earnings expectations are strong, 61 cents growing to over $1.42. That's over 130% growth over the next 3 years. Again, very strong. Revenue also expected to increase from 13 billion to 24 billion. That's going to be almost 100%. So overall, I think it's a phenomenal business. Balance sheet wise, we're looking at a lot of here, let me just take a look. Risk-weighted adjusted risk-weighted assets, tier 1, tier 2. But total assets, 68 billion. Liabilities are 57 billion. And they don't categorize. So $33 billion of debt, and we're looking at cash about 8.7. So net debt is positive, which is not good. I mean, not really that it's not good, but usually something that I like is negative net debt, meaning more cash than debt on the balance sheet. But I think all in all, NU Holdings is a pretty strong, good business. Overall profitable, revenues are growing and expected to continue growing, and so are earnings. And so support level is going to step out at 1642, a resistance all the way up to 1750 for NU Holdings. So Caddy, based on what criteria and or research did you create your shopping list? Only high quality companies after you made extensive research on, or what made the company qualify your list? So it's a great question. Usually these are companies that are market leaders, dominant in their industries with very strong future growth potential, and targeting the 3Ms, basically companies that have a strong management company, or basically strong management, very good markets, right? Very large and growing markets. And third is the defensible moat. So having some kind of competitive advantage, because, you know, you can have a company with a very large market, but if it doesn't have a strong moat, there's going to be competition and margins are going to be driven down. So that is important to us. It could have a very strong defensible moat, right? It could have the best technology that no other company has, but if it's operating in a very small market, if it's a very niched market, it doesn't have room to grow. So that is also very important to us. It can have a very strong market, very defensible moat, but if the management is poor and doesn't know how to execute it or capitalize on it, it's also not useful. So all three pillars are extremely important. Having good management with a strong and growing market, large market, and a defensible moat creates sort of like the starting criteria for that company. And then of course we delve deeper into qualitative and quantitative analysis, looking at financial statements, future forecasting, and then essentially underwriting based on conservative expectations for growth, multiples, and then figuring out what the fair value is going to be. So fair value is really just a true intrinsic value calculation that I run to forecast future earnings and cash flows and discount them back to present value to figure out, okay, what would be the business worth today based on their future cash flows and with a margin of safety. So if they are downward revisions, if they don't meet expectations, which again, analysts are almost always very bullish and optimistic. So I go several percentage points lower than what analysts are pricing in for, and that essentially calculates my fair value. So there's a whole process. It can be an extensive process or it can be a very quick process. Depends how much time you really want to spend. I posted a video on how to calculate a fair value on a stock in under 15 minutes using our MoneyVest platform. You can watch that. You can do some very, back of the napkin calculations and rough estimates for what the fair value might be, or you can spend more time, diving deep into the business, the market share, the management, how defensible is the moat, all of those things to better understand where the fair value might be. So boomers love going to the bank so they can yell at the underpaid staff. Yep, that's unfortunate. Out of all those fintech companies you mentioned, SoFi is the only one that has a stadium in Los Angeles named after them. Yes, that is true. SoFi Stadium. Your recent Patreon post with how to calculate stocks fair value. Can you do a slower, more example video? It was great, just done by a professional like second nature for you. Too fast. I'll definitely keep that in mind, and we'll see if I can do a slower example tutorial. And we're also going to be doing tutorials on other tools, because I think one of the most underused and the most powerful tool in our platform is the net liquidation value, which I think a lot of people can benefit from that. So if you come over to Analyzer, we've got 4 models that you can run your analysis on. You've got the discounted cash flows, you've got the discounted earnings, you've got the case analysis, which helps you basically, run your entire calculations for whatever you want. You can analyze for EBITDA, revenue, earnings, operating cash flow, which I've never seen anywhere you can do it, and operating income. You can do it for free cash flow, of course, and for different time frames, 3, 5, 7, 10 years. But the most important one, which sets us the foundation, the baseline, is a net liquidation value. This is, net asset value for the business. If it were to liquidate everything today, what would be the actual true book value for the business if you were not accounting for any speculative premium or anything the market premium is adjusting for? And so this is, again, if you can find something which is very close to net liquidation value, that becomes a hidden gem in the market, and the true mispricing occurs if something is trading below its NLV. So that, again, we'll be doing a lot of tutorials. Right now, my focus is building on more features. I want to build more tools and more features and more dashboards for all of you. So we just introduced a VIX dashboard. I'm going to do a whole separate video on how to utilize this, how to actually look at the data, what makes most sense and why it matters. So all of that, we're going to be doing more tutorials and more videos on. So yes, I'll do them slowly, and I'll definitely be recording more videos for everyone to watch, because there's a wealth of information there that I think it's super, super helpful. Which is your most important asset, number one, you trust with all? Just one you think would long-term the most? Okay, that's a very, very good question. In terms of asset classes, it's kind of hard because everything has its pros and cons, right? Because nothing is like a true, asset that I can be like, okay, this is the one. Because everything is going to be subjective. Everything is, the answer to most financial questions is going to be, it depends, right? It depends because it really does depend on many, many variables that you can't standardize or, it cannot be the same for everyone. But for me personally, I think I do love like 4 asset classes. I love stocks. Obviously, that's the bread and butter. That's where I invest most of my money. I'm really starting to love real estate. I think over the last 2 years, my experience with real estate has grown. Learned so much about everything from all angles, from a developer's angle, from an investor's angle, from a landlord's angle. Everything that I've learned has been very useful. So I'm starting to love that asset class. Third, coming from India, I love commodities, gold, silver. I mean, that's what my family has been investing in for many years. That's what most Indian families buy, is gold and silver. So I do think that gold and silver long-term will continue to be very strong, asset allocators, like in terms of capital preservation and even growth. And then fourth and final is going to be, I think, private equity and business. So just kind of investing in business. And that's an area that I'm exploring now because that's where your acceleration and that's where your alpha comes from. Stocks, real estate, gold will give you very good sort of decent returns, 20, 30% if you're lucky in stocks. Options will be a little bit of an accelerator to those. Real estate, 8 to 10%, 12%. Gold is going to be much lower, but it's for a different purpose. And then finally, private equity, businesses, that's where your acceleration comes from. That's where 5x, 10x, 20x opportunities come in. But of course, it's also a lot more risky. So yeah, I mean, there's no one asset. It's just all of them serving different purposes. And for us, our goal really is portfolio allocation, capital allocation, understanding how you want to position yourself, what you want to invest in more versus less. Depends very much on your liquidity, your objectives, your risk tolerance. There's so many variables. So, but those are the 4 places where I'm like putting my money: stocks, real estate, commodities, and a little bit, of course, crypto. But my conviction in crypto is not as high as other things. So thoughts on cybersecurity ETF, 6 months down 5.7% today. So CIBR is the ETF that I have been talking about, down over 1%. It has been selling off because the entire cybersecurity space has been selling off. I did a video on cybersecurity over the weekend, so definitely do check that out because we talked about, CrowdStrike, Zscaler. We talked about Fortinet and Palo Alto as well. Palo Alto being the biggest one, has been selling off aggressively. It's down another 0.5%. It's coming down to a very strong support, down at 144, 145. But CIBR is an ETF that I could pick up very soon. If it continues to drop further at under $60, I think makes a lot more sense at those levels. So we have a few tickers reporting this week that have been mentioned on our Discord. Can we do a quick check on their numbers? NRG, Zeta, TEM, EOS is another one, but you already mocked us for that one. No, I think fundamentals for EOS, of course, were not what we look for, but technically, yes, we can definitely look into those because, not everything is for investment. Things can be for trading as well, making quick buck and then getting out. But let me just start with Zeta first, since we have done analysis on this company before. So we're looking at support around $13.80, almost $14. So if you go to our platform and come over to Zeta, we're going to be able to find the earnings volatility. It's got an M score of 2.4, so it doesn't rank very high on the M score. But if you come over to earnings volatility, it's got a hit or miss in terms of earnings beat or revenue beat. We've got a 41% beat rate on EPS, a 58% beat rate on revenue over the last 12 quarters. That's like 3 years worth of data. Average price movement 5.6, median's about 8%. So yes, the stock does indeed move. It does move a lot. The direction is quite unknown because of the volatility and of course the uncertainty whether it's going to be a beat or a miss. So over the last 12 quarters, we have seen 4 times the stock has moved down. In the last 3 earnings, it has moved up all three times. The last couple times, in fact, 19 to as much as 27% move to the upside. So that is pretty substantial there. And again, not every time you beat and the stock goes up, because sometimes you can miss on revenue and just meet on EPS and the stock still goes up 27%. So that's why I always talk about earnings being the most binary event you can have, because nobody knows how the stock's going to react. You could know the stock's going to beat revenue and EPS and guidance and still not know if the stock's going to go up or down. And that's what's interesting about the market so much, is even if we do know, we never know. So, but in terms of analyst estimates, we've got price targets even on the lower end suggesting for $25, that's 53% higher. Average is 20 to 86, median's 29. And so we're looking at anywhere from 50 to 77% upside with a earnings multiple. And again, profitability is expected later this year. So starting 2026, we're looking at an earnings of about 66 cents with a forward P multiple dropping all the way down to 10, which is, again, compounded annual growth rate about 106%. So yes, profitability is expected to be strong. Zeta was also not part of the shopping list, but I did a video which I was very pleased with the overall business, but I did also highlight some risks to consider for Zeta Holdings. So resistance 1740, very strong support down at 1350. If it does continue to sell off, the P multiple is going to be much lower for future earnings, and we're looking at under $12, $11 as even better prices for Zeta. So a few more I'll take a look at. So let's see, TEM. So I think that's Tempest AI. So Tempest here also on a very strong downtrend. So overall, lower highs and lower lows. So this is the lower high and lower low pattern. As it continues, support level is going to stay put at $53, $54. With a resistance all the way up to $62, $63 for Tempest AI. And overall, still not profitable yet, generating massive losses. And we've got a valuation that is sitting at almost 10 times sales with a balance sheet that has about $500 million of debt. Earnings-wise, it's not expected to be profitable by at least 2028. And so I'd keep a support at 54, preferably a much better price around $35, $36 for Tempest AI. Okay, I'm in that EOSE boat with you, Dave. Let's keep rowing and bailing out the boat. Was it supposed to be a trade, or is it like a actual long-term investment for you guys? I'm just curious, what is the thesis behind it? So yeah, support level is going to stay up roughly at 1050 for EOSE. A lot of resistance here at around 1840, 1850. It's dropped quite a bit from its highs, 43%. And if it does break below this, which has been a historical support, as you can see, that back in 2021, it bounced off of exactly these levels. I mean, this was the IPO. This is the bounce from 2021. Again, it validated these levels, but then when it broke down, it really broke down. It just absolutely got crushed down to $1 per share before consolidating, pushing higher again, and then had a very nice run up. And it's now once again dealing with that area of support. So if it does break below this, I would watch the support down to around $7, kind of aligned with this previous resistance. So yeah, 355 is a target for my Microsoft stock here. So 355 being a buy target and the fair value for Microsoft, and I could see it getting down there. How many people here could see Microsoft getting down to 350s if the software sell-off were to get worse? Because this is going to be that next support here around 375, 380, and then beyond that we're looking at 350s. That's the March and April 2025 lows. and also resistance from back in 2023. So got it. It was supposed to be a wheel. I just sold my first call a little early. Man, how's your morning, guys? I just dug myself out of 3 feet of snow. Man, where are you joining us from, Mario? Is it somewhere in Canada, somewhere in the US, or what part of the world? What part of the world? Like, obviously the weather here is amazing. Can't complain, but I also don't want to rub it in people's face. So I do feel for you. I have experienced the Northeast snow for sure, and it's brutal, absolutely brutal. Well, hope your morning gets better with a hot chocolate or something, but yeah, absolutely crazy over the overall snow there. Do you have NVO on your shopping list? No, we don't. We used to have it, but we don't anymore. I think I removed it a couple updates ago. I had removed NVO, but right now we don't have it on our shopping list. Just to double check. Just want to make sure I don't give you the wrong information, but I don't think we have it. No, we don't. So NVO is not part of it. But yeah, this will get updated at the end of this month, by Friday, most likely, after the Nvidia earnings are out, and we'll have new fair values and buy targets for all stocks, all of them. And there will be some removals and some new additions, companies that I've been researching that might serve as an under the radar stock. And for that, I am even thinking about creating like a separate small to mid cap shopping list. As these tend to be a bit more, sort of larger cap. So there's a lot of companies that are over $100 billion market cap. Some are, between 20 and 100 billion as well. But I was thinking about creating like a small cap shopping list for under 20 billion that are profitable or on the verge of profitability, but have much higher growth expectations in terms of, the stock price. Like we're looking at, 3x, 4x, 5x potential for those names, because like I said, for smaller companies, it's much easier to go from 10 to 20 billion in market cap or valuation, as opposed to a company like 100 billion to go to 200 billion, right? It's the same percentage gain, but a lot more challenging for the latter versus the former. But the former also has a higher degree of risk. The latter, not so much. It's already a proven, established company, just needs to keep executing. But just a thought, and something that I will definitely ask all the members if they're interested in like a small cap shopping list as well. Because that will be like around $1 to $20 billion market cap companies. Something that we can find under the radar, hidden gems. Floridians rub the great weather in everyone's faces. It's one of our few flexes. Oh man, I know. But then the people in Dubai rub it in the people of Florida. So Dave, you really gotta pick if you really want to do that, because then the weather is even better here. But then of course in the summer it gets brutal, absolutely brutal. Next week, after we warm up again, let's totally point and laugh. Market rotation will continue. Careful with SaaS stocks, Mark says. Yeah, so I think that will continue for sure. I think there will be a risk-off environment until the uncertainty is lifted. And a lot of that uncertainty, some of it should be cleared with NVIDIA's earnings. I think because NVIDIA acting as a bit of a benchmark for the entire AI space. Truly the margins and the overall guidance and Jensen Huang's comments on the overall spend matters, because a lot of these hyperscalers are spending billions, hundreds of billions of dollars, and investors can't seem to wrap their head around like what is going to be the ROI, like what is the return on invested capital on all of this. And the worst thing for any company right now is that if they break even on this investment, that's the worst thing, because if they break even, that is just not going to cut it. They need to be able to do at least more than 8 to 10% returns on invested capital in order to not only beat inflation, but also overall financing cost, construction build out, depreciation, everything factored in. They need to be able to generate at least a lift of 12% net on cash flows and revenue. And I think that's really what the numbers are going to quantify over the coming quarters. This quarter earnings were still for Q4 2025. But Q1 26, Q2 26, once the CapEx starts to materialize, when companies are actually spending money, that's what Wall Street's going to really focus on. How are the numbers getting impacted? Are margins decreasing, or they're expanding, or they're staying flat? And what is the overall profit profile for these companies? What companies actually do have pricing power, and the ones that don't are just going to get crushed significantly. So Paul says we're not back. Yeah, we're not yet back. I think it's going to take time for us to be back. But again, depends on what sector and industries you're talking about. You know, if this was a channel focused on energy, we would have struggled for the last 3 years, but we would have been celebrating in the first quarter of 2026 because that's had the best year so far in 2026, right? So if you come over to sector analysis, again, coming over to performance, year to date, energy is leading this market higher, 22% gain. A lot of that has to do with, you know, a lot of supply opening up and geopolitical issues with uncertainty over Iran and oil prices higher, because if you come over to crude oil prices trading up to 67. Year to date, if I were to calculate since the beginning of this year, crude is up. So it was trading. So it started the year $56 a barrel. It's up $10 a barrel. It's up 17%, right? So energy stocks, without a doubt, are also higher so far this year because oil is up 17% year to date. So yeah, I mean, energy is leading this market higher, and then industrials, materials, staples, defensives being part of the overall flight to quality trade so far in 2026, also driving this market up. So Kenny, is your plan to keep dollar cost averaging on good stocks that you like during this dip? Yes, I mean that's the plan, and I would treat 2026 for software stocks as I treated 2022 for the entire market. You know, the best blessing you can have from the market is a long period of distressed prices. That's the biggest blessing you can have, because each month that you're working and you're making money, you're generating income, you can buy good quality companies at distressed prices. The longer this goes on, the more time you have to accumulate, right? That's how I view this, and that's why I feel more excited, not only when stocks are going down, but also when they're staying down. Those are two very different things, because if they go down and they go back up, we don't get much of a buying window. But if they go down and they stay down, that's great. I can keep buying, I can keep dollar cost averaging, and accumulate more shares for the eventual rally, because there's also an analysis over where the valuation becomes absurdly cheap, right? There's prices, there's actual prices where if it were given to us at those prices, we'd be very, very excited. We'd be like overly motivated to pick up more shares. And those prices, for example, if I tell you Nvidia at $100, right? Nvidia at $100 seems like an insane value, right? And that's why earnings yield and prices are all inversely correlated. So lower the prices come down, the better those deals become, the better the risk reward becomes. And there's always going to be a floor for that price. At certain price, even Wall Street, even institutions, even hedge funds, they can't resist. They cannot get it away. So they have to pour capital back into it. So that, I think, is very important for every investor to analyze. If it's a high quality company, it's always going to have some kind of floor to its pricing, because below that, it just starts to look absurdly cheap. That's why we have no-brainer buy targets, right? On our shopping list, there's a section for no-brainer. We rarely do see those prices get hit. For Nvidia, for example, right now it's 91. I doubt Nvidia is going to come down to 91, but that's the no-brainer buy, right? That's the no-brainer level where it doesn't make sense to not pick it up at those levels. So yeah, that I think is a way to look at it. And Milk says, take me back to 2022. Those are good times. Those were really good times. We had like a good 9-month prolonged sell-off, had great opportunities and time to accumulate so many shares at quality prices. I should not have gone to two things should not have happened in 2022 had we wanted a longer sell-off. I should not have changed my microphone. I mean, my red mic eventually died, and I switched it with a green microphone. And then I also did those circles, if you remember, in our Discord at the Bull in Italy. And that literally was in October of 22, and that was the bottom. It was crazy coincidence. Okay. Let's come back to some Q&A. So any questions, feel free. This is the time. Spent about 45 minutes to start the market open here. So we got another 9 minutes left until market opens. Trying a little bit of recovery there, but SPY still down 30 basis points. Year to date, essentially flat. And QQQs are also down about 1.8%. Year to date, down about 0.5%. Nvidia is higher. Robinhood is lower. Tesla, on the other hand, is also down about 1% at the moment. What are my thoughts on Netflix? So Netflix right now is consolidating, right? It has been selling off quite a bit, but it's now starting to find some kind of support at $74, $75, resistance up to $82. And right now, I've got about 100 shares, and I'm selling calls on any kind of green strength there for Netflix. So resistance is going to be $82 for Netflix there. So top 3 stocks that I'm hoping trade down to buy targets. So first one is going to be Nvidia, that I want to pick up more of because the data center market is going to continue to grow. And we're looking at 12 to 13% growth rates for Nvidia compounded annually in this data center space. And I think the robotics and automation revenue hasn't even unlocked fully. I think that's a big revenue opportunity for the company long term with electric vehicles, with autonomous driving and automation and manufacturing robotics. Like that's a whole new revenue stream that can really take Nvidia to close to 10 trillion long term is that market. It's a very large market, and Tesla kind of leading that physical AI shift with electric vehicles and autonomous driving. So Nvidia, Tesla, and the third one would be, I would say Palantir. I think Palantir, if it trades down to my fair value, which I recently calculated has been updated to $80, which I think is a big upgrade from the previous $40. It's more than double now. I think it's one of the most well-run companies. Very strong balance sheet, continues to gain more, traction in the commercial and government space all over the world. And so, yeah, those would be the 3 growth stocks that I would like to buy more. Okay, what are my thoughts on RVI? So let's see what this is. Robinhood Ventures Fund. Interesting. I have not looked into this. Companies located in the US. So Ventures Fund, I invest in companies. Okay, so I was talking about private equity. So the fund focuses on a broad range of sectors and industries. It provides financing for early stage transactions. Very, very interesting. Very interesting. We'll do more research on this. Shares offer 40 million, offer price is $25. Deal amount about $1 billion. Curious to understand their overall strategy and who the portfolio managers are, and what the overall structure is going to look like for this fund. But this is quite interesting. We'll definitely do more research. Thanks for sharing this and bringing this to our attention. But as I was saying earlier, private equity and early stage startup companies offer the most amount of multiples expansion, in terms of growth, and that's a huge accelerator and generator of alpha for your portfolio. That's where your outsized gains come from, like 20x and more. But the probability of success is also much, much lower. So treat this as your individual Shark Tank, as you're analyzing pre-IPO or private companies or startup companies and which ones you see the most potential in. Okay. What's my opinion on gold? Already talked about gold quite a bit. So why are you always so optimistic about the general market, but most of social media and the public is very pessimistic? Pessimism sells the news. Yeah, I think fear does a great job in sales and viewership and audience than optimism. I think, but it's also about finding the right balance, right? It's not just about being overly pessimistic or overly optimistic. You never want one view of the market or the world kind of define you, right? Or be that identity. I think it's really important to have a balanced, objective view, and also understanding that your opinions and your analysis can change, and it will change because the markets are changing. Everything is changing every day. So when you look at Michael Burry, right, having a pessimistic view, having short trades, that's his sort of identity, right? If you look at Michael Burry, if you talk about him, okay, bearish. What comes to mind? Bearish. Pessimism. Markets are going to crash. But then on the other side of the spectrum, if you talk about Tom Lee, what comes to mind? Bullish. Markets are going up, right? It's time to buy. So I think it's really important to have a balanced view because markets are changing and nothing lasts forever. Everything tends to be temporary in nature. Companies and businesses and management that is adapting to the changing environment, that is innovating, that is making mistakes, that is failing more often, are the companies that are going to last long term. So, one of the best examples I can give you is, in one of the Berkshire Hathaway meetings from back in the 1980s, Warren Buffett holds up a list of top 10 companies by market cap and asks the audience a very simple question. Who do you think is going to be on this list in the year 2020 or in the 21st century? And then now fast forward 30 years, not a single company from that list is now part of the list because we have reshuffled all the businesses that are now the biggest companies in the world. But the question is, of the Max 7 that we now have, how many of these 7 companies you think are going to be the top 7 30 years from now? So 30 is fast forward to 2056. You think the Max 7s are going to still be the Max 7, or is it going to be a whole new companies? I think it's going to be at least a few new entrants. I think there's going to be a few new companies that come in and dethrone these 7, or at least some of these 7. But that's the changing environment of the market. So I think it's really important to be objective and have a balanced view and not be overly pessimistic or overly optimistic. And then also let data do the talking, right? Let data, statistics actually do the work, and you form your opinions on data. So yeah, I think that's my 2 cents on that. Okay, so market's about to open in about a couple minutes here. We're looking at SPY down about 40 basis points right now. We got QQQs also down slightly. We got Nvidia pushing higher, up almost 1%, trading up to 191. Don't forget, Nvidia earnings, big earnings coming out on Wednesday. Wednesday is the day. Got Nvidia earnings to essentially, and what's that Nvidia meme? Let me see, Nvidia meme. That's going to be the meme that we're looking at, which is Nvidia holding up this one. This is the funniest meme. The entire market and Nvidia is literally holding up the entire market, as it always is. And if Nvidia does not perform, if it does not provide, if it does not live up to those expectations, then it's possible the entire market starts to come down. So that's what it's going to be, the most important numbers. And again, I did a video on Nvidia as well over the weekend. Check out that video if you haven't already. Just go to the MoneyVest channel and you should be able to find the video going over Nvidia's earnings. So there you have it, 30 seconds left for markets to open. Volatility is on the rise, up over 5%. Bitcoin continues to struggle, a little bit over 66,000 right now. Ethereum also trading up to 1,900 right now. Crude oil trading up to $67 a barrel as market breadth continues to get better. And we see this rotation away from tech over to other sectors. So hope you all enjoyed this live stream. Again, thank you so much for joining. How do we calculate growth of a company? Depends on many factors. I mean, you do have most of the work done by analyst estimates. You can look at the forecasted growth rates for earnings, for revenue, already provided to you by a lot of analysts. And these are all analysts on Wall Street, which our platform already compiles all this data for. So analyst estimates, you can see for Nvidia, there's 64 analysts on Wall Street putting together estimates for growth rates for revenue and earnings. But then you can also do your own research, look at the market share for the business in that industry. How much is that industry growing by? And then try to forecast what that company's growth is going to look like. So hopefully that gives you a little bit of an idea. So thank you so much. Thank you for the Monday TED Talk. Sorry if it felt like a TED Talk, but yeah, we did cover a lot of stocks. But yeah, thank you so much for joining, everyone. Really appreciate it. Again, link's going to be down below if you're interested in joining. The new shopping list gets updated at the end of this month with a lot of tutorials and videos also getting launched and updated on the MoneyVest platform. As always, happy investing. Have a great Monday. I'll see you all in the next video. Take care.